and he's saying that he's bought GSFC at a price of around 135 rupees per share. He wants to know whether he should continue to hold on to this particular counter or look to sell this particular counter. Kunal, first to you, GSFC, how does this counter look to you, and what should Ravi do with his holding?
See, I think you should hold on to your holdings over here. GSFC at this point is trading at 126. It's down below its 200 DMA, but the chart patterns have been quite strong and robust over the last 3 to 6 months. So you have to give it, give the stock a slight benefit of doubt in terms of advantage. And I believe that whenever the trend recovers for GSFC, the stock could scale past above the previous highs of 190 plus. So I would suggest a hold.
Okay. Good morning, Vijay. Vinny this side coming in, and I do want to talk to you. The first query is coming in from Soumitra Joshi, and he wants to know your view coming in on Hindustan Foods, holding it at 450 levels. What is the view for a long-term purpose? Should they continue to hold this stock?
Just hang on for a moment. I think that the stock has showed some resilience from the bottom of 1650 odd. It has come to 1852. And we are seeing that most of the FMCG companies, due to the reduction in the input prices, input cost, so all these companies are behaving well. So you look at Britannia, you look at Hindustan Lever, Nestle, most of the good FMCG counters are doing well. So I think that this stock has the potential of going up to 2000. There I would recommend that you can shift to a Hindustan Lever or a Nestle or a Britannia or a Dabur. So stay with the top rank companies because they would really come back fast. So again, hold at this point of time and exit around 2000.
All right, this next query that I have is from Mr. Tippeswamy, who is a retired employee. He's writing to us from Bangalore, and he's saying that he's a long-term investor, and he's been allotted 20 shares of Aditya Birla AMC in the recent IPO, and he's saying now the share prices have declined quite sharply. He wants to know what should he do. Should he sell, average, or continue to hold? Vijay, what's your take on Aditya Birla Sun Life AMC? What should Mr. Tippeswamy do?
I think that it will take some time and he has to be patient. Look at all the AMCs, HDFC AMC, Nippon, UTI AMC, all the AMC stocks have been battered in the last 1.5 years. So I think that, it would require a lot of patience, or you can shift it to some good FMCG company or a good auto ancillary company, so he can make the lost money. But yes, for all the AMC companies, I think it would take a lot of time for them to come back to the levels, and especially the IPO level. So I'm not very bullish on these companies. So I would recommend that exit on rallies and shift to a good specialty chemical company or a FMCG company or an auto related company. So I think that Bajaj Auto, Hero MotoCorp, Sundaram Clayton, these are great companies to get into these at these levels, and you'll get your money back for sure.
The next query, Kunal, we have is coming in for you, and this one is from Akshay Bhandari and wants to know about MAPI India. What is your view on this stock?
So yes, I think very short price history as compared to the other names. But then even with the shorter price history for MAPI India trading at 1490.92, the stock is also on the verge of a breakout of a parabolic star resistance. It's an interesting chart pattern. And is more visible on the weekly time frame because the short price history for the stock, and the breakout point is at 1560 mark. The last 3 months we've seen a good recovery shaping up for MAPI India from 1140 as a previous 3-month low. It's now moved up to almost nearing the 1500 mark for itself. So good recovery seen in the last 2-3 months, and now on the verge of a breakout. That should augur very well. If the investor is looking to buy, I would probably expect more of a short to medium term kind of a time horizon. You can look at it from the next 1 to 3 month time scale, and possibly a target of 1680 to 1700 also could be reached for MAPI India.
Okay, this one is from Mr. PJ Sharma, and this one is on Union Bank of India. Kunal, I'll come to you with this query. He's saying that he has 8,000 shares of Union Bank of India, which he's purchased at 39.5 rupees per share. But he's saying that the stock price is coming down continuously and he does not know what to do. Should he continue to exit or hold? And if hold, he wants to know how long will it take for Union Bank to reach a target of 50 rupees per share?
See, I think I would suggest definitely to exit the stock at current levels. You have to move on to quality in terms of the PSU banking names. PSU banking stocks is one of the weakest sectors in terms of price performance. And within the weaker sector, if you buy the weakest of the stocks, then the probability of the sector turning around and then the weaker stock turning around becomes far more lesser. So you're playing with a very low amount of probability when you are trying to buy a stock like Union Bank and expecting that the stock would get into a turnaround mode. First, it'll be the high or the high probability candidates or the top names which can get into a turnaround mode. So I would suggest that you have to shift from Union Bank to something like SBI, or maybe if you're looking at buying some low denominated stocks from the PSU banking names, you can look at maybe a Bank of Baroda as well at closer to this 100 odd mark.
Okay, Vijay, coming to you for the next query. We have a query from Shiva, and this is on Cochin Shipyard. Should they be making fresh investments in this one? Cochin Shipyards or SH Kelkar is the stock they're looking at, long-term view.
Well, I think Cochin Shipyard should be a better option amongst the two. And, try to get it around 300 odd if in a correction you get. So it's a good company, Government of India company. And, one thing we need to understand, post this war, the smaller countries are looking at India and Indian defense capabilities as far as the defense manufacturing goes. So a lot of countries have been ordering. HAL has received a lot of orders from smaller countries. Similarly, BEL has also received a lot of orders. And I think that, shipbuilding is also one of the businesses which India has large and huge capabilities. So we have good companies, Garden Reach, Cochin Shipyard are some of those. So I think that, buy it around 300 and hold it. And this stock has the capability and potential to come to 400 also, but it would take a longer period. In the longer term, I'm fairly bullish on all the defense companies.
All right, this one is coming from Denny Matthew from UK. He's asking a query on UPL 650 call option, Kunal. He's purchased it at 16 rupees, one lot of July expiry. He wants to know whether it can cross 800 rupees this month.
Wow, I think 800 could probably be a bit of a far cry for a stock like UPL. It's priced at 648, but I think you've bought an at the money, a slight out of the money, call option. I'm not sure when you've bought the call option, but I think you've bought the right strike. I would suggest to hold on. The stock is completing a classical pattern, a double bottom pattern on the daily time frame, and assumingly if the pattern gets completed and the stock doesn't break the previous low, you can look at a substantial upside coming back into this month for UPL. So maybe the stock can even try and come back to a 700, 750 zone. So the probability of the trade going right is much higher, and looking at the market scenario as well, I think there could be a higher chance that UPL can break past above the 650 mark.
Okay. Vijay, the next query is also coming in for you. Abhijit has bought IEX at a higher levels and is sitting on quite a huge loss. They've not specified the exact amount. Should they average at current levels? Should they exit is the view? There's no amount mentioned, but what is your view on IEX?
Well, the stock has shown complete destruction even on the technical charts. And I think that this stock can further head down if at all there is some kind of a correction in the market. So I would recommend that, keep a stop loss of 150, hold as of now. And if at all it's a very small stop loss although, but if at all it breaks 150, kindly get out and, get into some auto FMCG company, as I mentioned, or a good specialty chemical company. So I don't think really that IEX is quickly going to come up. It would take time. And I think that, the fall in crude yesterday would also propel thought process in the central bankers. And if at all, the food prices have come down, energy prices also coming down, natural gas has also corrected quite a bit. So I think that, we probably might not need as many interest rate hikes as we all have been expecting, or central bankers have been expecting. So in that case, I think that, interest rate sensitives would do good. Real estate is one of the packs which I am looking at very keenly. So I would say that, real estate, good real estate companies can be looked at.
All right, this next query that I have is coming in from Anand, and he wants, he's saying, please suggest Life Insurance Corporation. He's saying he's purchased it during IPO at a price of around 889 rupees per share, about 15 shares. He wants to hold it for the medium to long term, but he wants to know whether it makes sense to average by adding some more at these levels. What's your take on this one, Vijay?
Well, I think that although it's a good company, but pre-IPO also, I spoke on various channels that the valuation is a bit stretched, and the way the government cut down, from almost 65,000 crores to 21,000 crores, the size of the IPO, I was fairly skeptic that this IPO is going to take off. So I think that it's going to take a longer time, a lot of consolidation, and only then we'll see those 900 odd levels where it got listed. So a lot of patience required, or you keep strict stop losses. I would recommend a stop loss about 670 and keep on holding. So in case it comes down, just exit, get into some other story.
Next query I have is coming in on MRPL, and this query is from Mukil from Bangalore. Kunal, this one is for you. He's holding 500 shares of MRPL at 100 rupees per share. What is your opinion about holding this stock for a longer period of time, around 3 to 6 months?
See, I think this is the most important part now when traders or viewers who tend to buy the stocks which are riding on high momentum, and suddenly if the stock rallies up. So MRPL, for example, in the last 4 months, I think if I'm not wrong, the stock made a bottom in the month of March, which was almost at 37 or 38 rupees. And from there, in the end of month of May, the stock was almost at 125. Now, when you see such kind of a steep rise in the stock price, and you happen to buy the higher end of the price, you have to have a trailing stop loss, because there is always a higher possibility that the stock can get into a reversal for MRPL. So I think we are seeing that reversal playing out. Now, this could be a reversal which can probably last for maybe a couple of months more, and the price damage could be more severe than what you've seen the last 2 months. So I would suggest that wait out for any kind of a rallies which come by to the stock price as a good zone where you can look to exit.
All right. This one is from Anthony, and he's writing to us from Tirunelveli. Okay, I think it's a tongue twister for me, but he's writing to us from Tamil Nadu. And he's saying that he's bought Indian Hotels 2,500 shares at a price of 257.4 rupees per share in the first week of May. He wants the advice from the experts whether to hold or get out. What's your take on this one, Vijay? Indian Hotels, do you think that it makes sense to exit from this particular counter? Big reopen theme and continues to play out.
No point selling it at this time. Technically, fundamentally, both, it is showing good promise. We are witnessing a huge crowd at all the tourist destinations. Hotels are almost booked, and especially places like Goa or wherever we have a huge tourist traffic. Hotels are almost booked for the season and for the next. So it's very difficult to get a good room in a good hotel. So I would recommend that I'm fairly bullish on Indian Hotels, because it's a Tata Group company, and I'm in general a big fan of Tata Group companies. So Indian Hotels should do good, and so should HLV. This is Hotel Leela Ventures. So this stock is available at a pittance, at around 9 odd rupees. So Hotel Leela Ventures is also a very good brand and available at a very cheap price. So these two companies, I'm having it on my radar, and both of them should do good.
Okay. The next query we have is on ITD Cementation. Kunal, S. Roy wants a technical view on this one. He's holding it at 70 rupees per share. Should they continue to hold this one, or should they be looking to sell?
I would suggest to continue to hold on, and I think with crude oil prices coming down, it's going to have a trickling effect on the positive side for many of these cement stocks. And remember that these cement stocks have just over the last 1 or 2 months seen a lot of selling for themselves. So I would suggest a hold on ITD Cement, and I think if the stock breaks out of its 200-day moving average barrier, it could probably open the gates higher for almost levels of 78, 85 kind of a range for itself. So there seems to be a more potential upside and a good risk reward. I would suggest a hold.
Okay, this query is for you, Kunal. This one is from Raj Kumar. He's writing to us from Bangalore, and he's saying that he's bought 350 shares of Indiabulls Housing Finance at an average price of 98.8 rupees per share. He wants to know whether he should hold, sell, or average, but he's looking for a 3-year perspective. Can you give a view on this one?
See, I would suggest to exit the stock. Look at the last 4 years of the charts. The stock has corrected very sharply. It was a stock which was in the Nifty 50, I remember, at 1400 odd levels. From there, the stock is now 2 digits for itself. And, it's not just the price, damage to the stock price, but it's the, price trends in the worst of the market scenarios. So even in the best of the market times, the stock doesn't give you any kind of a major bump up or a rally. And when the market gets a bit more on the choppier side, you see the stocks making a fresh low. So these are not ideal candidates for a longer term buy. For me, if you ask me, I would definitely suggest an exit.
Okay, Vijay, coming to you, this is a very small company, RO Granite. Now, Nino wants to know, is there any, what should they be doing with the stock? They have a buying price of 60 rupees. Currently, when I'm looking at it, the stock is at around 40 rupees. So, should they continue to hold this stock, or what should they be doing here now?
For sure. I don't think that this stock has the ability of coming back easily, because they also had a follow-on public offer, if I'm not wrong. So I think that there is some issue with the company where it is not responding to the good news, and consistently it's falling down. So as I mentioned earlier, that be with the sectors which are promising. So I would again say that be with the specialty chemical sector. I think that these companies are doing fairly well. With the agrochemical sector, look at companies like Insecticides India. They have done fantastically well. The company has shown, wonderful growth path in the last 1 year or so. So I think that, be with agrochemical, chemical companies, auto, auto ancillaries, these companies look very good, and FMCG, quality FMCG companies. So I would not recommend to stay in Aerogranite. Get out on rallies is the call.
All right. This one is coming in from R. Ganesh. He's writing to us from Bangalore. And he's asking about SRF Limited. He wants to know whether we can buy it at current levels for the longer term, or rather, buy it at current levels for the longer term. What's your take on this one, Vijay? I remember yesterday also we took this query, and it was a consensus buy call from both of our experts. But what's your view on SRF?
Well, there's a death cross which has come up in this stock, and I don't think that whenever there is a death cross, the stock generally corrects. So I would recommend an exit. So this is the call. I would not recommend to stay in SRF as of now. We can probably look at it later. It's a good quality company, but yes, technically speaking, there's seemingly some problem. But fundamentally, it's a good company. So we'll wait and watch. As of now, I would recommend an exit.
Okay. Kunal, coming to you, the next query we have is coming in on the cement space, like JK Cement, Dalmia Bharat, Grasim. What Sagar is asking is they are almost ready to give some returns. Is that what you're looking at it in terms of charts? Could we be expecting a good move coming in here?
So there is a higher possibility, as I was explaining earlier, for a query on, I think, ITD Cement, that when these cement stocks, they are now at a very good risk-reward ratio for themselves. So the probability is very high that whenever the market lifts off into a breakout mode, that these cement stocks are bound to follow through on the upside. Now, the only question remains is that which are the kind of stocks which one should be lapping up. So I think at current levels, I would probably expect Shree Cement and Ultratech to do extremely well for themselves, because these are formidable large cap names, and the ones which have shown very good pedigree of price charts over the last decade and a half. So I would expect that these stocks to continue to move up higher from current levels, and they should be the first stocks from the cement space which should be bought into. And then if there is any amount of element still left into buying the stocks, then you can look at the other names, the likes of Ramco Cement, or maybe a Dalmia Bharat or JK Cement, etc., or maybe India Cement as well. So these are the names which you should be looking out for as the second preference, but the first preference have to go to Shree Cement and as well as Ultratech Cement.
All right, and this is this next query that I have is from one of our viewers, who's basically the definition of a long-term investor, and who actually will help all of our viewers also know that you must repose faith in the market and the power of compounding. This one is from Mr. Bala from Chennai, and he is invested in markets since 1981. He's saying that it's been about 41 years that he's been invested in the markets, and normally he says that he does invest in a particular stock and exit a stock, but this time he's talking about Timken India. And Kunal, this one is for you. He's saying that he has 69 shares of Timken India, which he's purchased at a price of around 2,000 rupees per share. He is still holding on to this counter. He wants to know what should he do. Should he now look to exit or continue to hold on to it? And he has also mentioned that he is just 65 years old.
Yeah, I think you're still very young. So I think in that regards, I would expect Timken India, and Timken India is a stock which has done exceptionally well over the last 2.5 decades. I think if I remember the stock from 2005-6, which was just about a stock which was at I think 100 rupees or 120 rupees, now moved up to almost 2,500. So it's done exceptionally well over the last 2 decades. Now at 2,450 odd levels, I believe that it's on the verge of a breakout. So technically looks quite strong. If the viewer can hold on, say, for another couple of years, then I believe that there's a strong potential upside which one can garner on this name.
That's the view on Timken India, but let's move on. And Vijay, coming to you, APL Apollo. Sudarshan wants to know whether they should be entering this stock at the current price. What is your view?
I think, with crude falling down, we have to watch, all the companies, especially plastics and the pipe companies, they should do good, because as I said earlier, that I'm expecting crude to fall down to maybe 80, 85, and if it does, the interest rates would increase, and if interest rates would increase, we'll see a reasonably good upside in the real estate space. And if at all that happens, so all these companies should do well. So specifically, APL Apollo, it's a fantastic company, but as of now, I would like to wait before entering into this company. So wait for some time, and once that happens, so if at all we see a fall down in crude, so probably we can lap into these good companies. But as of now, just wait and watch for a few days.
This one is coming in from Shubh, and Shubh is asking about IDFC First Bank, Kunal. He has about 3,500 shares purchased at 30 rupees per share. He's saying he's currently making 15% profit on his holding. So, but what should he do? Continue to hold on to it or look to sell?
See, I think you can hold on. I'm assuming it's a very short-term kind of a trade which you're looking out for. Even though the stock is giving you a 15% return, but I believe that there should be a more potential upside, because the stock just about when it hit that 30-odd mark, the indicators had come back into deep oversold territory. So there is possibility that the stock bounces back sharply on the weekly as well as on the monthly time frame. So maybe the stock can see a level of 35, 37 over the next few weeks. So I would probably suggest to hold on for that kind of a target.
Okay. Moving on to the next one, and the next query we have is coming in from Sunita, who is from Bangalore. Vijay, this one is for you. How is Jyoto Lab looking like for a long-term view? Should they be entering at the current price?
Yes, I think that Jyoto Lab looks very good on the charts and fundamentally also. So it has very good product range, from personal care to FMCG products. So this stock has the potential of going up to 180, even 190. So even if you get here, you get a decent get into the stock here, you get a decent return. So Jyoto Lab seemingly is a good choice and a good company, and I'm fairly bullish on the FMCG space, as I've been mentioning time and again.
This one is coming in from Jayashree from Bangalore, and Jayashree is holding 800 shares of ICTSC, purchased at the levels of 830 rupees per share. Wants to know what to do with this particular counter. Kunal, this particular counter saw that COVID hit, also saw that revenue sharing announcement that came from the government, which was later reverted, but it's not been able to recover from those levels, right? So what should Jayashree do with her holding currently at ICTSC?
See, I think one thing is you have to be very patient into this kind of a stock, because it's, what happened in 2021-20 for a stock like ICTSC was an exceptional case where the stock moved up into very strong periods of uptrend. Now the stock is normalizing itself. So the rallies are getting tapered off. The prices are getting into a narrowed band of consolidation. So that's a sign that the stock is now graduating into the next level, even though the prices are retracing lower. So I would suggest that you should have more patience into these kind of names. If you bought at higher levels of 800, I would suggest an averaging out closer to 550 odd mark for IRCTC. Bring your average closer to say 650, 675, and then possibly if the market turns around, then you could probably expect the stock to get into a breakout mode sooner than later. So I would expect, I would suggest a hold and expect the stock to do pretty well over the next 3 to 6 months.
Okay. The next query we have is coming in from Appala Raju, who's from Bangalore, and he's saying that he's a long-term investor holding M&M and Maruti 100 shares each. Vijay, he's making good returns on this one of around 34% and 17%. on the stocks. So should they continue to hold or look at selling these companies?
I think booking part profits is not also a bad strategy. So book some profits in Maruti and M&M. You can look at other companies as well. Bajaj Auto, Hero MotoCorp look excellent on the charts, and these are good, large cap behemoths. So you can look at these companies. TVS has already run up. You can look at smaller companies like Eicher. Eicher is also looking very good on the charts, and stocks like SML, Isuzu. They are also looking very good. So look at the auto pack very seriously. I think that the first signs of recovery in any economy is when we see an uptick in the auto sales. And last month numbers suggest so. We have seen an uptick of almost 27-28%. So I think that look at auto on a very serious note, and auto ancillary companies should do well with at least 1 quarter perspective. So I'm fairly bullish on auto. So keep on booking profits in Maruti and M&M, and as I mentioned, several companies you can enter there.
All right, this one is coming from Rutuja. Rutuja is writing to us from Jalgaon. A long-term view on ZAMTO for at least 2 years is what she's asking. She's already purchased about 50 shares at 113 rupees per share. Wants to know whether she should continue to hold or average out. What's your take on this one, Vijay? What should she do with ZAMTO?
I'm not very bullish on the new age internet companies because I don't see revenues happening. Whenever they have cash on books, they look at only one thing: acquisition. And if acquisition is the only way, burning cash is the only way. Look at the Blinkit. I don't think Blinkit can make money in the coming 4-5 years because this model is a cash guzzling model, and whichever company is looking only at client acquisition and not profits would not be very good to buy in the longer run. So I would say that get out on rallies. There is a whole lot of companies. Buy a Hindustan Lever, buy a Britannia. These are great companies. They would give you at least 20% YOY. They would give you dividends as well. So why to be with Zomato? So I think that there are better options. And even if you want to be in the tech space, I think that be with TCS. Be with an Infosys. So I would not recommend to be in any of these new age internet companies, PB Fintech, Zomato and all, because it would take a lot of time for them to make profits. And I'm a huge I'm a huge fan of profits on the balance sheet.
All right. I'm sorry, Vinny, it's your turn. Sorry.
So moving on, Kunal, coming to you. Ashish Kumar has a query coming in on IIFL Finance. He's bought it at 372 rupees per share, wants to sell it. What is your technical view on this one?
Well, as of now, the stock is at 333, trading about 200 DMAs, trading slightly above the 50-day moving average for itself. I would suggest a hold on. And assuming if the stock comes back closer to its 200 DMA, that's around 310 or 312 odd mark. That could be a point where you can look to average. Hold on. I would expect the stock to get into a breakout mode sooner than later and possibly reach levels of 375 as well.
Okay, Kunal, this one is for you, and this one is coming from Aarti. She's asking, is it advisable to sell Ultratech Cement and buy Tech Mahindra, or add some more of Mahindra and Mahindra for a time period of 1 year? Her buy price for Ultratech was 6,900.
I would suggest that you can look at buying Ultratech Cement or averaging Ultratech Cement at current levels. That's a more higher probability trade. And then if you're already holding Mahindra and Mahindra, then I would suggest to hold on to it. What these auto stocks and the price rally have shown in the last 2 or 3 months is that this is the start of a strong multi-month, multi-quarter, and possibly even a multi-year uptrend. And you would not want to exit the stock right at the start or the cusp of a new trend for themselves on a multi-year basis. So I would suggest to hold on. And if this breakout pans out or the multi-year trend pans out, you could probably expect Mahindra and Mahindra to be one of the top leaders from the entire auto pack. Just like, for example, what ICICI Bank did to the entire banking index, managed to show that leadership quality. I would expect something similar from M&M as well. I would suggest to hold on.
Okay, Vijay, coming to you. We have a query coming in from Jaya Krishnan, and this one is on Ultratech Cement. They are holding Ultratech Cement at 6,417 rupees per share. Should they hold, sell, average, and if average, at what levels with a long-term view?
Well, I think that Ultratech is doing fine, and let it be there. If you want to buy, you buy Ambuja, because I think that Ambuja Cement is looking very, very good on the charts. It's just about to make a a golden cross. So I think that Ambuja Cement should do well. Another point, cement companies were reeling under a lot of pressure as far as the coal supplies were, not available. And if at all coal was there, it was very expensive. Now we have seen the commodity prices crashing. The coal prices have come down by 20-25%. So this is a huge respite to all the cement companies. So I see Ambuja doing better than Ultratech, and both these companies have been acquired by Adani Group. And I think that this merger is going to happen soon. But Adani Group, as I can foresee, they would get a lot of government orders, so the order book won't be a problem. Ambuja anyway is a great brand for even retail. So add Ambuja and keep on holding Ultratech Cement. It will come slowly.
Query is a very interesting one actually, Kunal, and this one has come from a viewer, Aditya. And he is asking about Nifty. If you show, I would request my producer Adharaj to show the Nifty intraday graph. If you look at the Nifty intraday graph, you can see the sharp drop in the Nifty right after open and there on a recovery. So V-shaped movement on an intraday basis. How should actually viewers grapple with such sort of a movement when it comes to the benchmark indices on a day-to-day basis? I see there you go on your screen. You can see the sharp V-shaped recovery or V-shaped movement in the Nifty.
So I'll probably give a one-line answer, Cheryl. I believe that bulls, they love valleys because valleys, they lead to rallies. And this is like a V-shaped valley pattern being formed on the Nifty. So I particularly believe that these are good opportunities where one should look to buy, and especially a buy and dip.
Absolutely, Kunal.
We're going to steal this one, Kunal, from you. You'll hear it more often from us now.
But let's move on and start with the queries, the queries, and let's start with that. Kunal, coming to you first. TCPL, what's the view coming in on that target price for 6 to 12 months?
So I would expect at least another 10% to 15% upside. The chart patterns have been quite strong, trading at 800 plus levels would suggest a buy or a hold. 900 could be a potential target.
Okay, this one also is for you, Kunal, and this one is on Vedanta July futures at around 213 rupees per share. Ravi has written to us. He wants to know whether he should hold on for this month and what sort of stop loss should he keep in mind.
See, I think the stop loss has been passed out. I think 207.8 could be a decent stop loss. Stock is below that, but I would expect the stock to maybe bounce back from those levels. But if it comes closer to 215, 216 mark, good point to exit.
Vijay, the next query we have is coming in from Vivek. Should he invest in ITC at the current price? Is it the right time?
I won't recommend to invest in ITC. Let it fall down maybe 260 levels. That would be a great level to get acquired.
Okay.
I prefer Britannia, I prefer Nestle, I prefer
Okay, Thomas V. George is asking Kunal, is Happiest Minds a happy buy at current depressed market value?
Not really. Give it some more time. I think let the stock confirm a breakout. It has to break out of that psychological mark of 1000 plus levels. That could be a point where you can look to buy, not at current levels.
Okay. Vijay, the next query we have is coming in from Manish. This one is on Anjani Portland Cements, and they're holding it in their portfolio as of now, making a 35% loss. What is your view on this one? Hold or sell?
I would recommend exit or rally. As I said, entire movement back Ambuja and Nifty.
All right, Kunal, this one is for you. This one is from Sudha. Is it advisable to sell Indocount, where she's already making 10% loss in a month, and look to buy Jubilant Ingravia for 1 year?
So the switch is good, but the timing may not be correct. I would suggest to hold on for Indocount for some more time. The stock should bounce back towards 140, 145. That could be a point where you can pare down your losses and then switch.
Okay, and that is the end to the rapid fire. Don't mind me, first I did say fatafat, we're used to it. But that's the rapid fire and the query segment. Thank you so much, Kunal, as well as Vijay, for joining in with us. And viewers, don't go anywhere. We'll be back with more news on the other side.
Continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.